Hi friends, today we'll discuss collections during the loan management system. So, LOIs, loan origination will be from lead generation to loan disbursement. Once loan is disbursed, then there is a schedule. So, any customer who takes a loan from the bank, so after loan disbursement, bank will give a schedule. So, as per the schedule, he has to repay. It may be monthly, it may be weekly, it may be quarterly, half yearly, or it may be bullet loans. Bullet loans will be interest will be collected monthly or interest will be collected quarterly. EMI loans means principal and interest. You will have a EMI. So this is called. So after disbursement, then collection part will come. Disbursement, bank will give money to the customer. Collections, bank will collect the money from the customer against the loan. It may be monthly EMI. Okay. So monthly payment collection and other activities associated with maintaining of a loan. So already we discussed what is collections. So what are the regular collections? Regular collections are your EMIs, equated monthly installment. So it is the monthly amount customer must pay to the lender. So you have taken loan, customer taken loan from the lender bank. So this is the monthly commitment from the customer. EMI is a popular repayment method. We have different methods. Already we have discussed. We have a monthly interest and bullet payment and revolving credit. So many things are there. But EMI is the popular repayment method. Allows you to purchase expensive things and pay. So you can buy an expensive thing which you can't have afford to buy. For example, when we'll go for the loan, I want to buy a house, but with my salary or with my savings I can't buy, then I'll go for the loan. So I'll buy the expensive things, then that will be converted into easy EMIs to repay monthly. So how this repayment or collections will happen from customer to bank? Customer can pay monthly EMIs through cash, bank transfer or check, or if the customer having a savings account or current account or CCOD account in the same bank, he can give a standing instructions to transfer monthly EMI amount from his savings account to loan account. If the loan in X bank and your savings account or a salary account in Y bank, then you can give a ECS and NACH. So automatically these will be deducted every month and this will be transferred to your loan bank. So what is the collection process in banks? Repayment generation. So banks keep on giving the loans, so they will generate the repayment generation. So we have a different payment methods. So they will generate a file. Customers opted for cash, they'll generate a file. And you have different date, cycle date. Some customers they are given 5th, some customers they are given 10th, some customers they are given as a 15th. So different date, different mode of payments. Banks will generate the repayment generation files, and these, okay, if it is a cash, customer will pay the cash. If it is a cash, if it is a check, then this can be sent to the other bank for the collection. ECS snatch also it will be collected. So once file is generated, then we'll update the status. So it may be different modes, whether it is fail or pass. So after the fail or pass updated, then we'll do the verification. How many batches we have processed, in that how many records are there, how many records are failed, and how many records are bounced after processing. If any check or monthly commitment is not completed, that amount will be moved to overdue. And if any check or ECS or NACH is bounced, then bank will debit the check bounce charges or ECS bounce standards from customer loan account. So what is the collection reversal? Now collection means monthly EMI amount we bank has collected from the customer. In case it is a wrong entry, wrongly instead of X loan, this is credited to Y loan, then it is a reversal because of technical error. It has credited to wrong customer account. In that scenario, what we'll do? First will be, so uh, customer has given a bank check, so bank ledger debited and customer loan credited, but is a wrong. When you go for the collection reversal, what happens? Customer loan account will be debited and bank account will be credited, so that previous entry will be nullified. Collection correction means you have collected money from this correct customer but wrong amount. Instead of 1,000 rupees, you have collected 1,500, you have posted. In that, what happens? So bank account is debited 1,500, customer account is credited 1,500, but actual is 1,000 rupees only. So 500 only we are reversing. So this is called correction. We are not total transaction, we are not reversing. So 500 I am debiting loan and crediting bank, means net effect will be 1,000 rupees. So now whatever we discuss are scheduled payments. Scheduled payments will happen in regular intervals. It may be weekly, monthly, quarterly, off yearly, yearly. Unscheduled collections means customer suddenly comes to the bank and says, okay, 10,000 rupees you credit to my loan account. There won't be any monthly commitment. See, so you said like every month 10th I will pay the EMI amount, but you got some ad hoc amount. You come to bank and you said like, please accept my ad hoc amount, and this amount you can credit to my loan account. So bank, what they will do, they will collect the money, and this will be collected as per the order of recovery. So order of recovery means any point of time when bank collect or receives money from the customer, these will be adjusted to, in case any charges are there, then amount will be adjusted to charges. Remaining amount adjusted to interest. Any leftover amount that will be adjusted to principal. If nothing is available, interest charges are not due, then entire amount will be adjusted to principal. So this is the unscheduled collection. Overdue collection. Overdue collection means you have committed every month, you are paying EMI 5,200 rupees. For example, because of some problems, you are not paid for this month. So what will happen? That will be become overdue. So next month you have to pay 5,200 plus 5,200, and any overdue interest, any principal, any charges, it will be adjusted as per the order of recovery. First will be all overdue will be collected, overdue charges, overdue interest and overdue principal. Then after that it will be adjusted to interest. Remaining amount it will be adjusted to principal for the overdue collections. Advance collection. For example, 15th every month I am paying my EMI, but due to my some personal trip, I am going out of the station. What I'll do, 5th itself, I'll pay the EMI amount, and I'll ask bank take this amount as a advance collection. So bank, what they'll do, they collect the amount, because why these do? If I'm not paying on 15, then there will be penal interest, penal charges, everything. So I'm paying as a advance. These EMI amount, they'll keep it as a advance. So on the EMI amount, these advance amount will be adjusted to the customer EMI amount. Prepayment of collection. So in case borrower repays loan before actual repayment tenure, this is called prepayment. Means bulk amount you are paying. So whatever the amount you are paying, that will be collected as per the order of recovery, and if any charges are there, prepayment charges, that will be deducted, remaining will be adjusted to principal. What is collection and what is recovery? For example, bank collects money from the customer, those people taken the loan from the bank, this is called collections. If you send third party, bank sends third party to collect the money from the borrowers, then this is called as a recovery. Thank you friends. If you like my video, please subscribe my channel, please comment, and please share my channel details with your friends also.